We've got another busy week of earnings coming up. We'll hear reports from energy, pharma, and restaurant names. So we thought this would be a good time to play a little game of
Trade It or Fade It.
That's right, America's favorite game, Trade It or Fade It. So let's kick it off with Caterpillar. Steve, Trade It or Fade It?
It's going to be a trade it for me. Yes, I am negative on the overall market, but this one's a habitual beater of on EPS. It's beaten on eight straight quarters on EPS. Consensus estimates has EPS up quarter over year ago quarter, up 15% of the estimates. Sales up 11%. This is definitely a trade for me. And one last thing, just to be really quick on this, that chips deal that we had nothing to do with Caterpillar, but what it does for corporations, it was the last time that this administration has a shot at raising taxes on corporations, and I think that means a lot to a company like Caterpillar amongst a lot of other corporations. Tailwind, trade it.
Jeff Mills, what do you say?
All right, I'm going to take the other side of this one. I mean, I look at stocks like Cat, URI, Deere, a lot of these names that have behaved somewhat similarly. They've kind of rocketed higher lately, some of which are getting close to that 200-day resistance. I agree with Grasso in the sense that Cat's maybe just kind of in between that 50-day and 200-day. So if they do beat on earnings, maybe they have a little bit to go until they get to that resistance. But I showed a chart as a chart of the week a couple of weeks ago. It was Cat. It showed a 30-year chart. It was sort of at the top of that channel and starting to hook lower. I think that ends up being the trend. And again, these traditionally cyclical names as we move into the second half of the year, I think they're the new laggard. So I'd be a seller.
All right, next up, Starbucks. Courtney, trade it or fade it?
Yeah, I would trade this one. I do think that it actually trades at a pretty good valuation right now. And what's really interesting is you're seeing the consumer right now is clearly being pinched by inflation. But Starbucks actually shown that even when they've increased prices, they've had a really loyal customer base that's continued to spend there, which I think is really important for them. And also, they're a big China story, where that is a big portion of their sales right now. It's about 12% of their sales are in China. And as China starts to reopen over the longer run, I think that's only going to benefit them.
Karen, what do you say?
Yeah, so I would be a fader of Starbucks. I agree with Courtney on that the China part is weighing down on it right now. But I do think that the consumer is somewhat strapped. And I think they're, maybe they'll still go to Starbucks, but maybe they just trade down a little bit. And we know that Howard Schultz is in the middle of a difficult turnaround that I think is not really taking hold yet. It may. And the multiple, though, I think it's 29 times, is significantly above the market, and maybe it's cheap relative to where Starbucks has traded in the past, but I think 29 times is just too much.
All right, let's get to Square here. Jeff Mills, trade it or fade it?
I'm going to fade this one. I don't mean to make this a would you rather, but I think PayPal is good context, right? It's a similar company, but it's higher free cash flow. It's more profitable. It's quality. That's the profile you want right now. And I think at 20 times with those characteristics, I want that versus something that's more reliant on future growth like Square. So it's a fade.
You pulled a Grasso for one, and you did a game within a game. So there are two strikes against you, Jeff Mills.
Congrats,
Courtney,
Jeff.
Courtney, what do you say?
I said sorry.
I'm going to take the other side of this also. I think there's just been so much negativity priced in here. It's down 54%, which is significantly lower than where the markets are. And you're also looking at as earnings are coming out here shortly. There's a really low bar that has to beat. So I think longer term, it does have a lot of opportunities as we look forward. There's still a whole electronic payment system abroad that really has a whole growth potential to go forward that they can really scale that way. So just given the low bar, I think it might be worth a trade here.
All right, last but not least, Zillow. Karen, this is in your portfolio?
It is in my portfolio, so trade it would be the right. Clearly it's down for the year, which hasn't been good because of the Housing Association. But I really give this management team a huge pat on the back for getting out of the very asset-heavy home owning business. They did a great job of liquidating that. So I like what they're doing there. They also have a fantastic balance sheet. They're doing aggressive buybacks. I think the valuation here is attractive. I understand there's absolutely pressure on the housing market, but they are the leader in the space, so trade it.
Steve Grasso.
I'm going to fade it. I think Karen's position is going to be in excellent shape longer term, but I think the damage to the housing industry is probably just beginning. So this one is at the pinnacle, or I should say at the epicenter of that housing industry. It has not been able to get above its 50-day moving average since March, and it just had a shade of optimism on it, and it failed again. So I think ultimately she's okay. Right now, near term, it's a fade.